Hey
Hi,
everyone.
everybody.
Today we're going to be talking about tax homes. We get a lot of questions about this. One of the most commonly asked questions about travel therapists, and there's a lot of misconceptions with travel therapists as far as tax homes go. Also, recruiters sometimes give bad information about tax homes. So we want to cover all that today, try to clarify some things for you guys, and hopefully you'll come away with a little better understanding.
Absolutely. Yeah, so to introduce us, my name is Whitney Aiken, and this is Jared Kazaza, and we are both traveling physical therapists. Some of you guys may know us already. We have been traveling physical therapists for going on 4 years. We both started right out of school as new grads, and we have learned a lot in our 4 years of traveling. We had done a lot of research before we got started traveling as new grads, and there wasn't quite as much research information out there, I guess. So we really had to dig for information and ask a lot of questions, and we've definitely learned a lot over the years. But a big question that a lot of people that are getting into travel therapy want to know about is, what is a tax home and how does that impact me, and how do I make sure I'm following all the rules? However, there are some therapists that for years had no idea about tax homes, and that information wasn't as readily available, and maybe if they didn't hear it from their recruiter and they didn't really dig for that information, they may not have had any idea about it. So this is a big topic that we want to cover tonight for those of you guys that either just started traveling or those of you that haven't started traveling yet. But even like sometimes we'll get questions from people who have been traveling for a while that might not really understand tax homes. So we want to talk a little bit about that tonight. It is important that we highlight that we are not tax professionals. We are just traveling physical therapists. We don't have any formal training in the IRS guidelines or tax code or anything like that. So this is all just based on our own reading and understanding. So we do encourage you guys to do your own research, and a great resource online for that is a website called traveltax.com. It is run by a tax professional, Joseph Smith, and there are some other resources out there. You can read up on the tax code as far as how it works for traveling healthcare professionals. It works the same for any type of traveling healthcare professional. So you could even find some resources if you just Google about traveling nurses or traveling therapists and that sort of thing. So as usual, Jared is going to get this video shared in a few groups so we can have some more people join the conversation. I see that a few of you have signed on already. I would love if you could just say hello below and let us know who you are. If you are a current therapist that is looking into traveling, if you're a student that's looking into traveling, if you're a current travel therapist that's maybe newer, or maybe you've been doing it for a while but you still don't feel like you understand this topic, we'd love to hear from you in the comments as to who you are and where you are in this process. So I see that Josh has signed on with us. Hi, Josh. Anybody else on with us tonight? And sorry, my voice is a little scratchy, so I'll do my best tonight.
Today I accidentally took both sets of car keys, and Whitney had to take an Uber to work, so that was
Yep.
an
That was a
exciting
thing
day.
that happened. We already had a long weekend. We were traveling out of town this weekend to see our friends in Morehead City, North Carolina, which was awesome, but it was a lot of driving, a lot of riding in the car, 5 hours each way. So we got back late last night, and then this morning Jared took off with both sets of keys, so I didn't have any car keys to get to work, so I had to call an Uber. So it's been an interesting day, and we just got off work. We work until 7 at night, so Jared had to come get me at work, and yeah, here we are. So it's been a long day, but we're happy to be with you guys tonight. So for those of you guys that are just signing on, please just comment below and let us know who you are. If you're a student or a clinician or a current or aspiring travel therapist, we'd love to know.
All right.
So let's get into the topic.
So what is a tax home? And do you need one as a travel therapist? So the answer is no, you don't need a tax home to be a traveling therapist. But you do need a tax home in order to get tax-free stipends, which is the main thing that makes traveling so lucrative for most travel therapists. So if you don't have a tax home as a travel therapist, what is the word? Itinerant? You're considered an itinerant worker, which means that you're basically your home changes each time you move, and in that case, all of your pay would be taxed at your regular taxable rate. Versus as a travel therapist, we get a lower hourly rate, but we get stipends that are tax free that make the traveling a lot more a lot more lucrative for us.
So just to back up a little bit about how all of this works and why you need to maintain a tax home if you want to get tax-free stipends. The way that you have to understand a little bit the way that pay works as a travel healthcare professional. So as a travel healthcare professional, if you do meet the requirements of maintaining a tax home, and there's some other requirements we're going to talk about, you are eligible to receive stipends or a per diem as part of your pay package tax-free. The reason that you are supposed to get that money is kind of the same reason that any other type of worker, not even just a healthcare traveler, but a common example I like to use is like a pilot. So the reason that a pilot would receive a tax-free reimbursement or tax-free per diem is because a pilot has a home base. He or she might have a home, a mortgage, a family. He lives in Phoenix, Arizona, and that's his home. Now, for his job duties, he's required to travel away from Phoenix, Arizona on a plane and go places. And he might have to do overnight flights where he needs to get a hotel and he needs to have meals and that sort of thing. So as an employee that travels for work a few days a week or part of the time, he's eligible to get tax-free reimbursements because the IRS and the government understands that he's still paying a mortgage back home and he's still having all these expenses at his primary residence, while also having to pay for a hotel room for the night and meals on the road. And this applies to a lot of different professions.
It applies to military as well. Military usually will get some kind of stipend for housing wherever they're stationed, because it's the same situation. You usually have a home base, you get stationed somewhere, you don't, some of them get rid of their houses, but some don't. And since you have to travel for work, then you get this stipend to help pay for that duplicate housing, basically. So the same thing is the case for us. So, just like our pilot example, same thing. We're going to a different area to work. Usually it's 3 months at a time, a lot longer than a pilot, but still, same thing. So we have a home area that we're paying expenses at, and then we have to go somewhere else to work. So because of that duplicating housing expenses, that's why we're eligible for tax-free housing, meals, and incidental stipends.
So like Jared said earlier, there is an option to work as a traveling therapist or a traveling healthcare professional where you do not maintain a tax home, and you're more or less like a nomad or a gypsy who just moves around from place to place and doesn't keep a home base. That's fine, but if you don't meet these guidelines that the IRS has set forth to be a true travel therapist that has a home, you would be considered an itinerant employee or a transient employee, and you would not be eligible to receive your stipends tax-free. Now, the travel therapy could still pay you a comparable rate. It would just be a little less because all of your money would be taxed instead of benefiting from this tax-free money.
So for example, maybe instead of getting paid $20 an hour taxable and $25 an hour non-taxed, you might be getting paid $45 an hour all taxable. So obviously you're going to pay higher taxes on that, which means you're going to be taking home less money, which is not ideal for us that want to make as much as we can.
Yeah, so you can definitely make more if you're a true traveler who, has these requirements that we're going to talk about maintaining a tax home. However, you do also have to take into account the fact one of the big main requirements to be a true traveler who has a tax home is that you are duplicating expenses. So you're paying some type of expenses at home and some type of expenses at your travel location. So that takes out a little bit of your money in expenses. Even though your income is higher, your expenses are also higher. So an itinerant employee or a true gypsy, nomad, therapist, healthcare worker that just travels and doesn't maintain a home base, they will make a little less, but their expenses will probably also be a little less. So it's something to consider.
But there's also hassles with that. So if you don't have a home address, where you're getting your mail sent to or where you're registering to vote and those kind of things. If you're moving from state to state, it's really nice to have a home base where you have your car registered and all your bank statements go to, or use that for like applications of any sort, or it's really nice to have that home location anyway, that you're not just moving and changing addresses every 3 months.
So we're going to jump into kind of defining what is a tax home, what qualifies, and what are the requirements to maintaining this. I see a few new people have signed on. Hi, Mark. Thanks for joining us tonight. If anybody else has signed on, please just say hi below and let us know who our audience is. We'd love to know if you are a future traveler, a current traveler, a student, a clinician. We'd love to hear who you are. So let's define what is a tax home. So a lot of people think it's just a permanent address. It's not just a permanent address. That's part of it. So
a lot of recruiters will tell you that it's just, you qualify for stipends as long as you have like some address on there that a family member lives at, and you put this on this piece of paper and sign it, then you get stipends.
Yeah.
That's not the case.
Which kind of goes back to the point of don't just rely on the recruiters. You really need to do your own research, and in most cases probably have a conversation with a tax professional to know whether your situation really qualifies. Don't just rely on the travel companies and the recruiters. They're not experts. Don't just rely on what we say. We're not experts either. We're just giving you some information based on what we've learned.
Yep.
So to truly maintain a tax home, this needs to be a place of residence where you return to frequently. There's three main things. One of them is you don't abandon your tax home. So this is somewhere that you go to fairly regularly. You return home to. Now, in the example of the pilot, he's going to return home more often than you are. So there's no set guideline on exactly how often you need to return home, but you need to not abandon your home. It needs to be somewhere you stay fairly regularly.
These three guidelines she's talking about, the terminology in it's kind of vague, which is makes things difficult because it's kind of open to interpretation. But you can look back at court cases where this has come up and kind of make a judgment about what they mean based on those cases. And so most professionals will recommend, tax professionals will recommend about 30 days that you need to be spending at least at that tax home to qualify as not abandoning the home.
If you check out traveltax.com, Joseph Smith's general requirements that they recommend are 30 days every 12 months or 60 days every 24 months. But again, this is not black and white. This is not clear cut. I've been getting a lot of questions lately, like, do you guys return home 30 days a year? Is it exactly 30? How do they know? How, this sort of thing. It's general. It just means that you just can't go and work in Hawaii for 12 months and not take any time off to show that you may have returned home, because obviously if your home is in Virginia and you worked in Hawaii continuously for 12 months on a couple of different contracts, there's no way you went home. You really abandoned your home for a whole year.
Yeah.
So you really need to maintain, records of some sort that show, okay, I did have this time off during my contract. I was not working continuously throughout that year. Some people even suggest that you maintain like receipts to show that you did return home, like gas receipts or a plane ticket or that sort of thing. Yeah. Again, it's all kind of gray. So it just depends on how comfortable you feel with it, and if you have a CPA that you consult with, what they think.
And something else we should mention here is this is never a question unless you're audited. So this is all your records that you're keeping track of. And then if anyone ever asks you for them, like a IRS auditor for some reason, you get audited and they're like, hey, why is this income not reported or whatever, then you'd be like, okay, well, this is what my job is. I have to leave home for that job. I have these duplicate expenses. Here's the days that I was home, and you just give them all this information. Right. So for most travelers, you're keeping all this information. And you might not ever even have to show it to anyone.
And you need to keep it for what, like at least 5 years?
You can get audited, I believe it's, up to 5 years in the future. So, you want to keep it for a while.
So kind of going down the list of different requirements. One more thing about that, about keeping records. Sometimes certain travel companies like to have something on record for their purposes of, maybe you signed a statement that says, I maintain a tax home at this address. Or maybe you actually show them your lease, or maybe you actually show them a bill that says you have a tax home. So sometimes travel companies require paperwork just for their own purposes, but for the most part, you just keep the paperwork yourself in case you ever get audited. And again, there have been travelers that have traveled for years and didn't even know that you needed to maintain these records, and they didn't, and they came out fine, but had they been audited, they would have been in trouble. Yeah.
The first traveler I ever met had been traveling for 5 years and never knew what a tax home was the whole time. So. Right. It happens a lot that, people aren't involved in these online communities like this. They don't have anybody else that's a traveler that they talk to really. They're just going from assignment to assignment and never talk to a CPA. They're taking advice from recruiters. So in that case, you might not ever know. But yeah, you definitely want to play it safe there.
Right. So I'm just going to give a brief overview. So the one thing is the three main requirements to maintaining a hard and fast tax home. Don't abandon your tax home. Have duplicate expenses. And conduct business in the area. So we talked about don't abandon your tax home already. Second thing, duplicating expenses.
Yep. So that means that you have costs associated with your home area, and you have costs associated with the area you're traveling to. So in general, that's going to mean rent in the home area and rent and also in the place that you're traveling to. That would count as duplicating expenses and utilities, stuff like that. So a lot of people ask questions about well, can I just rent a room as my tax home? And yes, you can, but you want to make sure that you're renting the room at like a market rate. So that means that if you went on Craigslist or something and you were going to rent a similar room to what you're renting, how much would that cost? And that will give you an idea of how much you should be paying for that room. So for example, if you rented a room, say your sister lives in the same town as you and you don't want to keep your apartment while you're traveling, so you move into a room in their house, you need a lease and you need to be paying a market rate for rent for that room, for that to count.
Yep, so it has to be considered fair market value. So some people say, well, my mom and dad don't want me to pay them rent. I just live at home. That's my home I grew up in. But unfortunately, you know, to maintain these rules, you do need to pay them something, and it can't just be $50 a month. It has to be fair market value. So if you look on Craigslist and someone else is renting a room in your area, a room in a house, and maybe they rent it for $300 a month, or maybe if you live in, you know, a big city, maybe it's $600 a month. You need to be paying your parents or your family member or your friend a fair market value. And you need to have a lease and keep records, keep a paper trail of the fact that you wrote them checks or have them write you a receipt or that sort of thing. So that's part of it. Now, you could also have a really good example of a tax home would be if you actually do have your own house and your own mortgage, and you do have, you know, obviously you have your records of your mortgage payments and your bills and that sort of thing.
Yeah, or just your own apartment where you've lived for, say you lived there the last 3 years as a permanent therapist, or last 3 years while you're in school, and you just keep that apartment, and then you, you know, you keep paying rent there, and then you travel somewhere else, and you know, you're paying duplicate expenses that way.
Yep, so you have to have some kind of expenses there and a record of those expenses. At the same time, you have to have a record of paying expenses where you're traveling to. So some people ask, okay, I'm only gonna try to go to cities where I have friends who I can crash in their guest's bedroom. That's fine, but again, you need to pay your friend some type of fair market value for the room that you're renting, or either that or split expenses evenly with them for their bills and that sort of thing. So you need to maintain a record of that. Maybe that's a lease that you have with your friend, or if you rent a room off Craigslist, or you rent an apartment through the apartment complex, or you go through Airbnb, you need to have some kind of record that you paid expenses there, or a hotel, an extended stay, that sort of thing.
Yep, and a receipt and either a receipt if you paid cash, or like a canceled check if you paid with a check, or a I guess you could use like Venmo or whatever to send money to, you know, if it's someone that you know, you can send money back and forth like that. But you know, you need to have a lease signed as well by both parties. That's
Right.
a good
I'm
insurance.
not sure about Venmo. I've had people ask about that. I tend to try to write actual physical checks. That
It's a
way
lot easier to have proof that way, for sure.
Because Venmo, it's like, oh, I guess you could screenshot it, but and I know a lot of people do online banking now, but you know, I think it's better to have a paper trail, because a lot of people may not even know this, like millennials or whatever the current generation is, that probably don't write checks that much. Ow, just banged my hand. They don't write checks that much. This whole canceled check thing just means when you give a check to someone and the bank scans it in, it creates a picture. And so for the most part, if you do online banking, you can go into your online bank account and just click on that transaction, and it'll show like a little magnifying glass or a little picture symbol, and you click on it and it'll show an actual copy of a photocopy of the check that you did when that person cashes it. Or you can go to your bank and ask them to print out the canceled check history, so that way it shows that you paid that person.
Okay, so that's two of the guidelines right there. The third one that we haven't talked about yet is doing business in the area. So again, pretty vague. What does doing business mean? Well, the big thing that it means is having a job in the area. So that would be, you know, either like a PRN job that you work between contracts, or you know, a job that you, even a full-time job that gives you like flexibility to leave and come back. Sometimes home health is like that. But having a job in the area that you work part of the year is ideal for doing business in the area. It can also include things like having your car registered there, having a voter registration there, having all your bank and credit card statements go there. What else?
Car registration,
Insurance.
your driver's license, having your that's the address on your driver's license, that sort of thing. Yeah, your insurance.
Yeah, so having everything registered there. You know, you have a bank in the area, you say you're involved in a church community in the area, all those things are kind of doing business in the area, right?
That's where your primary care doctor is that you see once a year, that sort of thing.
Yeah.
Now, it's important to know there's just 3 rules. I think generally, that's funny about balancing your checkbook. Yeah, nobody really balances checkbooks anymore.
How's it going, Xander?
Hi, Xander. Hi, Cameron. So again, duplicating expenses, not abandoning your tax home, and conducting some sort of business in the area of your tax home. Those are the three things. I believe, if I'm not mistaken, you at least have to have two of them,
Yeah.
preferably
So
three.
To have a legit solid tax home, you need all three, right? But if you have two, then it's kind of a case-by-case basis. So if you duplicate expenses and you return back there 30 days a year, but you don't have a job in the area, you can do business as far as like banking and all those things we talked about, and that would be a pretty solid case for a tax home in that situation.
But the only true way to know, if you feel uncertain, if
Yeah,
you
talk
feel
to
like
a CPA for sure.
if you feel like, well, I'm paying expenses, I do go back there fairly regularly, but I don't really have a business there, then maybe you want to talk to a CPA and just ask them, like, do they feel that you have it nailed down and that you're, minding your P's and Q's and checking all the boxes. So that's something that you really want to talk to a tax expert about. They also do consultations on traveltax.com, which is just a really good resource for any healthcare traveler, nurses, therapists, etc.
Yeah. So you need at least two of the three, ideally three of those three guidelines
Right.
to have a solid tax home.
And again, this is all just in case you ever get audited. It's a
This
little
is
bit.
all your own records
Right.
that you keep just in case you ever have to show it
All
to
the areas are a little gray, so if you ask somebody, well, what about this? Well, what about this? We can't, none of
Yeah.
us, not even a CPA, can tell you for sure, but a CPA can give you the best advice. We're definitely not experts in this area, and this is stuff that we've read on, but you definitely want to, if you're not sure, talk to a CPA, talk to Travel Tax.
Yeah.
Something else I wanted to mention as far as, okay, we mentioned these three rules, right? Nowhere do we mention something called the 50-mile rule.
Yeah.
So you guys might have heard of this 50-mile rule.
A lot of recruiting companies and recruiters will talk about you have to just be 50 miles away. So when we started out, one of the recruiters we talked to, they were like, okay, all you need to do is be 50 miles away and put your parents' address on there, and that's all that matters. Well, that's not true at all. So you need to have these things we were talking about. You need to be duplicating expenses, returning home, doing business in the area. Those are the things that actually matter. This 50-mile rule thing is just a myth. This was something created by travel companies. This is nowhere in the tax law. It's created by travel companies for them to kind of have like a weeding out process for travelers. Because what they don't want is to have a traveler, say you live at home, right? And you find a travel assignment that's 25 miles away and you commute back and forth. So you're getting higher travel pay, but you're still living at home. That's not allowed. So the travel company, if they get audited, and they have travelers doing that kind of thing, and they're giving out tax-free stipends for someone that's not duplicating expenses, then they can get in trouble for that.
Mm-hmm.
So this 50-mile thing is like kind of a rule that they made up just to be like, okay, if someone is taking a job that's 50 miles away from their home address, then chances are they're not going to be commuting back and forth. So chances are they're going to have to spend the night somewhere else, which means that they have a situation where they're duplicating expenses. So that's why that
rule came
50-mile rule came
But
about.
I mean, realistically, could you find a travel job 55 miles away and commute there? Heck yeah, you could, because people do that all the time. People live at home and work an hour away. I mean, that's common.
Yeah.
So just because the travel company says it has to be 50 miles doesn't mean you're following the rules. You could live at your parents' house and drive to a travel job 51 miles away,
Yeah.
and not be following any of the rules. So
It needs to be a non-commutable distance. So that's something that actually is listed in the tax law.
Yeah.
It needs to be an area outside that wouldn't be a reasonable commute per day.
like, for example, we're living near DC right now, and we have come to find out that people, like normal, regular employees, commute from Richmond to DC like an hour and a half to 2 hours
Yes, 2 hours.
on a normal basis. So if you lived in Richmond and took a travel job in DC, some people might say that could be not considered, more than a commutable distance. But if you are, if you're maintaining your tax home the way you're supposed to, then that's not a question.
Yeah.
So don't get fooled by this 50-mile rule just with the recruiting companies. However, some of them won't let you take a job that's less than 50 miles away and still give you the stipends just to protect themselves, even if you can show them, like, look, it's 49 miles away and I'm not commuting that distance. I'm gonna get an apartment there, duplicate expenses. Sometimes they still won't.
Yeah, it's an internal rule so that they can't override it. Like the recruiter can't just override that. So
Yeah.
in
So
that
that's
situation, you could actually we actually had a similar situation where Whitney took a job that was about, I think it was like 46 or 47 miles away. We actually had a solid tax home. We're paying rent in our home address. Had an apartment there. we were doing everything by the rules, and they still wouldn't let us have the
Yeah, and that was like one of our very first jobs, and we didn't know. And so I thought I was getting the tax-free money the whole time, and it turns out at the end I wasn't. I was getting taxed on it all, and so I definitely got screwed because I didn't ask the right questions. So make sure you got all that cleared up before you take your contract.
Definitely something to know.
So we got a couple questions. If you guys have questions for us, go ahead and just comment below and let us know. We'd love to hear from you, and we can answer questions from our experience. But again, like I said, we're not experts, but we definitely have read a lot about it and talked to a lot of people about it, and we've been doing it ourselves for 4 years. So
yeah, and this is a complicated topic, and it's hard for us. We were sitting down trying to come up with a flow for all this, and it's hard to come up with a step-by-step order to go through all this. So it's kind of scattered. So if any of that didn't make sense, yeah, definitely let us know. We can clarify things.
And we also have an article that kind of lays it out. If you're more of the type of person who likes to read stuff and look at it in front of you, we can share that article. And again, I will link to a great resource. It's called traveltax.com, where they list out all these rules. And this is where we've learned a lot of the information is from that website.
So Paula said, asking for a friend, can he still travel if he does not have a permanent home address anymore? And that's what we were talking about in the beginning. You can still travel, but you would be an itinerant worker, which means that all of the pay would be taxable. So you'd still probably make a significant amount more than a permanent job, but it would probably be closer to in line with a PRN full-time job. So it might be something like $45 an hour or maybe $50 an hour, but it would all be taxed versus as a traveler with stipends, you'd be getting only like maybe a $20 to $25 an hour taxable rate, and then you'd be getting maybe $20 an hour or $25 an hour in stipends that are tax-free. So you won't make as much, but you probably would still make more than a permanent job, and somewhere in between.
Yep. So for those of you guys that have joined on, please leave us a comment. Just say hi. We'd love it if you give us a thumbs up, like the video if it has helped you. We're here to answer any other questions you guys have as well. For those of you guys that are tuning in live, please just comment below and ask us any questions you have. And if this gave you value and you want to share it with a friend or tag a friend below that might be interested in learning more about being a travel therapist and maintaining a tax home, please tag a friend below, and we'd be happy to help them as well too.
Yep.
Do you guys have any more questions about maintaining tax homes, about all the different ins and outs of it? Because I know it's a complicated subject, and even sometimes we'll get questions that dive deeper. Like people will email us and say, okay, I know that these are the rules, but what about this? And we're not always the best people to answer that. We can give you our best guess, but sometimes it's better to talk to a CPA or a tax professional that can answer those questions a little better for you.
Yep.
Hi Matt, thank you. He says, I just learned about your page and you guys rocked. So yeah, I don't know if I mentioned that our page is called Travel Therapy Mentor. Thank you, Matt. We really appreciate it. Travel Therapy Mentor, and we are here to talk about all things travel related.
We do these live videos every week
yeah.
about a different topic. So
yeah, and we also have a website. So we have our Facebook page, which is where we do our live videos, but we have a website, which is kind of where it all started, and we do a lot of blog posts on there about these different topics. We've got topics on there about tax homes, about pay, about insurance and benefits, and working with different recruiters and companies and all that kind of stuff. So if you guys want to check that out as well, we have a lot of information on there.
All right, so Xander said, what about differences in states that have income tax versus ones that don't? Missed the beginning. Okay.
So that's kind of not really related, but
it's a good question. Yeah, and we'll probably do a whole video about like doing taxes as a traveler, because we've always done our taxes on our own. And people ask that all the time, like, do you have to go to a CPA or can you do it on your own? How difficult is it? So as far as income taxes, the state that you're working in is where you always pay taxes. Whether you're a permanent employee, a traveler, or whatever, wherever you're working, you always pay taxes there. That even applies to people like professional athletes that say like someone on the Knicks plays in Los Angeles. They pay taxes what they earn that night in Los Angeles. So it applies to everyone. So as a travel therapist, you're paying taxes in the state that you work in. When you go to file your taxes though, you have to also pay taxes to your tax home location. So say for us, say we worked the entire year in North Carolina. All the income we earned in North Carolina is taxed at the North Carolina income tax rate, and all of our withholdings are going to North Carolina. At the end of the year, we have to file in Virginia, but we get a credit for what we paid in North Carolina towards our Virginia income taxes owed. Does that make sense? So say throughout the year, I paid $300 to North Carolina, and then at the end of the year, I owe $350 to Virginia for all those same wages. I get a credit from North Carolina for $300 towards Virginia. So then I would owe $50 to Virginia, and I've already paid that $300 to North Carolina. So this really comes into play when you have a state that has a high income tax rate and a state that has no income taxes, because what if you worked in, say, Nevada that has no income tax? You didn't pay any taxes all year, but you live in Virginia, then at the end of the year, you're going to owe Virginia like $600. And that credit doesn't help you because you didn't pay anything. So yeah, you do have to be mindful of that. You pretty much end up paying the higher of the two rates, either the state you worked in or your home state.
Yep.
So
even if you didn't work in your home state, like last year, we are from Virginia. We only worked in North Carolina. We did not have one day of work in Virginia. So we get taxed in Virginia still and taxed in North Carolina, but you just pay the difference. So we get credit for what we paid in North Carolina towards Virginia. But if we work in a non-tax, no income tax state, like Florida, people will be like, oh, I don't owe any taxes because I worked in Florida. No, you still owe taxes. You still have to pay your home state.
Yep.
So that's another thing to consider.
So Xander, you live in Tennessee, so that means that you wouldn't owe anything at the end of the year to your tax state, your tax home state. But you would owe throughout the year to whatever state you're working in. So if you worked in like Florida or Nevada or Texas or any of those states that don't have any income state taxes, then you wouldn't pay any taxes at all.
Woohoo, no taxes.
Yeah, but if you do work in a state that has income tax, then you pay taxes at that rate.
Right. So clear as mud, right? But yeah, so you can't escape taxes if your home state does have taxes. So there's a lot of different factors to consider if you are going to be a traveler who maintains a tax home. I'd say for the most part, you do come out ahead, especially if you can maintain low expenses. So it's budgeting and money and life are all about expenses versus income. So how much money do I make versus how much do I spend? And this is my bottom line at the end of the day. So if you can keep your expenses low at your tax home, like instead of having a super expensive apartment at home or a super expensive mortgage, if you could just rent a room in a house, you're going to keep your expenses lower.
While you're gone, and say you have a 2-bedroom apartment, rent one of the rooms while you're gone. Like, you have your own bedroom, you lock the door when you leave for your travel assignment. Find a roommate, obviously, that you trust, but rent out the other room, and they can cover, a lot of the costs while you're gone. That saves you a lot of money there on that tax home.
Or people ask a lot of questions of like, well, could I Airbnb out my house or rent out my house if I have a mortgage and a full house while I'm gone? The answer is that you can't rent out your whole house or your whole apartment for the whole time you're gone. You can rent out part of it, but you do still have to be having some expenses. Like you can't rent out the whole house and have your whole mortgage and everything covered, because then you're not duplicating expenses just because you own a house. You
would need to have at least one room in the place that is solely yours, that no one else goes into while you're gone. That's basically the requirement. So if you had a 5-bedroom house, you could rent out 4 bedrooms. You just have to have one room that's yours.
And you would just have to do a creative lease that says this tenant is renting the house, including 4 bedrooms. However, the master bedroom is locked and this is not accessible. This room is blah blah for the owners.
And it would have to be available for you to come back to anytime, because that's your home. So you'd have a key to the house, you'd have a key to the room, and you could go in there whenever you want, right? So
yeah. So there's a lot of people that ask that question of like, obviously they want to maximize their income and decrease their expenses. So like, oh, if I'm going to be away all year working, I'll just rent out my house. But make sure you follow the rules and still have some expenses at home. And then of course, the other flip side of that is making sure you have low expenses at your travel location. If possible, try not to get the really expensive corporate housing that costs $2,000 a month. Yeah. Because any of these things just brings down your bottom line.
And if you're a single traveler and you rent a room in your tax home, and you have everything registered there, and you go back there often, and then on your travel assignment you rent a room in a house, like that's pretty low expenses. Like you'll be able to save a lot of money that way. So.
Right. But something to consider is the fact that you could be just a gypsy or a nomad, or it's called an itinerant worker, and just not maintain these ties. Don't maintain a tax home, don't maintain any of it. And then when you take travel contracts, you just negotiate your rate with the travel company to where it's all taxed. And you can still do that, and that's fine. You don't have to worry about maintaining any of the records, any of the stuff, and you might make a little less, but you also don't have to have all this hassle.
Yep. So Xander said his plan is to buy a house and rent a room to a current PT student while he's gone. So yeah, that's an awesome idea. We've considered in the past getting like a investment property that's like a triplex or a quadplex or something like that, and keeping one of the units for us, and then renting out the other 2 or 3. And if you did it that way and you bought a good property, then you could theoretically have the other 2 or 3 units pay all the expenses while you're gone. And that would still count as your tax home, but you really wouldn't have any expenses there, which is wonderful.
But would that count if they don't have any expenses? If their
Yeah.
whole mortgage is covered?
Yep, still counts. As long as, because you're still paying property taxes on it, you're still paying for insurance on the house, you're still paying for repairs on the house, you're still paying the mortgage, you're getting rent from these people that's offsetting that, but you're still paying the mortgage physically. So that still counts. So,
Okay. But then, I guess to maintain, the reason why you have to have the room available for yourself is to maintain that don't abandon your tax
yeah,
home rule.
exactly. Yep.
And returning frequently.
Yeah. Triplex would be awesome.
Yeah. Sounds like Xander's on board with us with the house hacking and
Yeah.
real estate investing, so we can chat more about that later. Anyone else have any other questions? Thank you guys for joining us tonight. Please comment below if you have questions. If you are catching us on the replay, feel free to leave your questions below or send us a message.
Yep, hashtag team replay.
We'd love if you guys could just give us a thumbs up, give us a heart. That way, more people can see this video. We can get the message out there so we have the most informed travelers possible. Because there's definitely travelers we talked to that have traveled for a while and they're like, tax home what? Like I write down my parents' address and that's it. And they were super confident that they were doing everything by the book and they weren't. So yeah, we would love if you guys could just like this, share it, tag a friend below. That way more people can learn about
and we'll have
the rules.
another video next Sunday at 8. Not sure what we'll be talking about yet. If you guys have any recommendations or any suggestions, just send them our way and we can make a video about whatever you guys want to learn about.
Yeah, and if you guys are tuning in with us for the first time and you've never watched one of our videos before, if you just go to our page on Facebook, Travel Therapy Mentor, and follow us or like the page on there, you'll get notifications when we have our next live video. We do them every week. You can also visit our blog, our website, traveltherapymentor.com, to learn about different topics related to travel therapy. You can send us a message and ask us for recommendations for which companies and recruiters we like and all that kind of stuff.
Yep.
And we'd be happy to help you guys get started on your travel journey, or even if you are a current travel therapist and you just want to chat with us because you aren't sure you're doing things the right way or you want to know about our experience, we're happy to chat with you as well.
So thanks for watching, guys. We'll see you next Sunday at 8.
All right, bye guys. Have a great night.
See ya.